Welcome back, everyone. In this video, I'm going to talk about the worst type of investment properties to purchase in 2025. And the first one I want to talk about is apartments in Melbourne CBD. In fact, the more specific I'm talking about is studio apartments. Ones that look like these. The one bedder by one bathroom apartments are honestly some of the worst type of investments to purchase in Australia. They absolutely hold no value. They are hard to sell. They are hard to even rent out apart from student accommodation. And there's just an abundant amount of supply when it comes to these studio apartments, especially in Melbourne CBD. Generally speaking, I don't advise on ever buying one bedroom, one bathroom apartments just because it doesn't ever do well. It doesn't grow in capital, and there's just an abundant amount of them. And as we know, the enemy to capital growth is supply. And when we look at Melbourne CBD, you can see the number of apartments throughout this location, with a number of them having multiple apartments for sale in the same building. I mean, just this one alone, you can see there are two studio apartments being sold at the same time because no one wants to buy them. And that's the reality of it. And if you start to look and we start to broaden out our scope, you can see just the number of high-rise apartment buildings available for sale. In this unit alone, there are 5 buildings. In this one, there are 2. In this one, there are 2. This is a problem for us for capital growth to happen just because there's so much supply there and not enough demand. And this just doesn't also apply to buying properties in Melbourne CBD or studio apartments in Melbourne CBD. If we extend this out a little bit further and we look at the amount of properties available to rent, we can see in this apartment building alone, there are 4 properties which a person can choose from. What makes you think they're going to choose your property? Your property is going to lie vacant for a really long period of time, unable to rent out. And it's not just in the one apartment building. You've got in other apartment buildings, you've got 3, you've got another 4 over here. And it's not just Melbourne CBD. When you start to zoom out, there's just an abundant amount of properties available to rent throughout Docklands, throughout Melbourne, throughout the South Bank area as well. So if you are looking for an investment in 2025, the last thing you want to do is actually purchase a studio apartment or even an apartment in Melbourne CBD. It is one of the worst type of investments. And if you want to avoid silly mistakes like this, then you need to be part of the private community where over 280 members are currently benefiting from the mentorship, guidance, and resources available in this private community. We have over 46 reviews, and there is so much information jam-packed into this community that you will not regret it. And by the way, there's also a 30-day money-back guarantee. So if you don't like it, you can always get a refund as well. So instead of spending that $35 at KFC to feed your family for one night, invest in the private community and grow your financial wealth into the future. It's $35 a month. It's an absolute no-brainer. But let's continue on with the video. Now, the next thing I want to go over is alongside the apartments is off-the-plan apartments. These are some of the worst type of investments that you can do because they are riddled with problems, delays, construction delays, fake promises, and poor returns over the long term, right? It is one of the biggest things that you want to be avoiding. And there's a couple of things that you want to read about. You want to go to these off-the-plan guides, for example, and look at what the benefits are. But then you also want to look at what the problems with purchasing off-the-plan apartments are, right? Usually they're not valued properly. They have marketing and sales tactics where people get kickbacks, developers get kickbacks, and the people selling you these properties get kickbacks as well. So if a buyer's agent is selling you an off-the-plan property, best believe that they are getting a kickback from the developer themselves. And they also try to lure you in with things like rental guarantees, which are just essentially fake promises which are baked into the price that you pay, right? And normally you will be paying inflated prices for these units and these properties, paying way over market value with no guarantee of future success. They might advertise it as that, but let me tell you right now, it is fake. And the reason I'm not showing you any of these fake companies or these developments is because I don't want to be sued, because they are very large companies and corporations that have very big ties, and I ain't got the money to fight them, to be quite honest with you. But there are a lot of problems, and this rental guarantee is the biggest risk. Apart from development delays, false sense of security when it comes to rental guarantees, inflated prices, delays, there is everything wrong with off-the-plan properties. So make sure you go read it, because if you're going to spend $650,000 on an off-the-plan property like a 3x2 or a 2x1, you might as well take that money and invest in a proper house and land that you know is already established, that you know is developed properly, and you know that it's going to rise in value, right? So please do not purchase off the plan. And I know my community and the people who watch my YouTube videos are more intelligent investors already, but for those of you who are thinking about it, do not do it. Please spread the word. Help people out. Now, the next type of investment property that I think is the worst to invest into in 2025 is one trick pony towns. Now, you may have heard me say this many a time, but I want to re emphasize this point of you need to be avoiding mining towns or one trick pony towns where the entire economy of that local town depends on one singular industry. And for an example, I'm talking about Collie in WA or like Emerald in Queensland, where you can clearly see it is a mining town. And not only that, when you look at the data behind it, you have a look at its long term historical value, and you can see that it's gone through large cyclical changes. And it went through a bit of a mining boom and bust, and now once again, it's gone through this huge spurt of growth alongside WA. But if you plan to hold investment properties for the long term, the last thing you want to be doing is investing at the peak, let alone in a single industry mining town like this, because this will only get you into trouble. Because the long term outlook for this is always uncertain. If mining collapses, you can best believe house prices are going to collapse along with it. And right now, if anything, it's the worst time to invest. If you're a short term investor and you're trying to play the game, maybe you could have timed the market when WA was starting to grow. But right now, at the peak, after 70% growth, I would not be touching this with a 10-foot pole. And they try to entice you with low property prices and high yields. But remember, capital growth is why we invest. Yield is important, but capital growth is why we invest. So please be careful of one trick pony towns. Another example is Emerald in Queensland, which I can show you. Like you can see here, Emerald as well. I know this is being promoted amongst the BAs for whatever reason, but this huge cyclical movement is what concerns me. When you look at some of these regional locations, some of them have never gone through a downturn. It may have gone through stagnation, but it's never gone through an actual downturn, unlike these locations. So please be aware of one trick mining towns or one trick pony towns. So please be careful. Now, the next worst type of investment property in 2025 is low yielding assets. Now, this may be a bit counterintuitive, but the reason I say this is because if you are intending to build a large property portfolio, you need to have good yields. And if anyone says anything otherwise, they haven't bought an investment property, quite frankly. And there's always a lot of talk about buying in blue chip locations, locations where no more housing can be built, etc., 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 which is true to a certain extent. However, it should not come at the cost of yields. If you bought a house in, say, this random suburb, which I pick randomly, by the way, in Melbourne, at a 1.36% yield, you are paying tens of thousands of $20,000 in excess just to hold a property. This is not a smart play if you're trying to buy an investment property and trying to build a property portfolio. You cannot have low yields. Now, already Melbourne is historically known for very low yields, around 2 to 3% on average, but there are locations where you can find 4 and maybe up to 5% if you are a shrewd investor and you buy right. But the worst thing you can do to yourself for your current cash flow situation and your long-term property portfolio building is by purchasing a low yielding property like this one here. And yes, it may rise in value, but the only way you're going to be able to borrow more money to then rebuy somewhere else is by selling this current investment property because the yield is too low. It will kill your borrowing capacity. And remember, property is a game of finance. And the moment you run out of lending is the moment your investing stops. So please, if anyone pushes you these low yield properties, these blue chip suburbs, ask your mortgage broker, if I bought this property at X yield, how much can I borrow again in the future, right? You may have capital, you may have equity, but you will not have the borrowing to go rebuy again. So please be careful. And those are the worst type of investment properties. And if you want to avoid silly mistakes like this and you want to find the right location to invest into and connect with like-minded individuals so you aren't led astray, you can just join the private community for $35 a month. It's an absolute steal. And if you don't like it, I can give your money back in 30 days. But there's over 46 reviews and I know you will love it. Till next time, thank you.